In this video, we are going to talk about habits to reach financial freedom. So before starting this video, please like this video and subscribe to our channel for the future updates. 1. Set life goals. To what extent do you feel you have financial freedom? There is a widespread yearning for it among all people, yet that cannot suffice as an objective. You will need to be very explicit with the sums and the timelines. Your chances of attaining your objectives increase in proportion to the level of specificity with which you express them. Put in writing these 3 goals for the project. 1. How much money you need to support your lifestyle. 2. How much money you should have in your bank account to make that feasible. And 3. At what age you should have reached the goal amount in your savings account. After that, begin counting backwards from the age at which the deadline applies to your present age, and then set financial mileposts at regular intervals in between the 2 dates. Put the target sheet at the front of your financial binder and make sure that all of the amounts and due dates are clearly written down. 2. Make a monthly budget. Creating a household budget on a monthly basis and being committed to it is the most effective strategy to ensure that all bills are paid and that savings goals are met. In addition to this, maintaining a consistent routine is an excellent way to remind yourself of your objectives and strengthen your will to avoid giving in to temptation. 3. Pay off credit cards in full. The use of credit cards and other types of high-interest consumer loans is detrimental to the process of wealth accumulation. Always aim to clear the whole debt at the end of each billing cycle. Because of the normally significantly lower interest rates, paying off student debts, mortgages, and other loans of a similar kind is not an immediate need. However, making on-time payments for these loans with reduced interest rates is still very essential, and doing so will help develop a positive credit rating. 4. Create automatic savings. Put your own needs first. You should sign up for the retirement plan offered by your company and take advantage of any matching contribution benefits, since they effectively amount to money that has been given to you for free. It is also a good idea to have an automatic withdrawal into an emergency fund, which may be used for unanticipated needs, as well as an automatic contribution into a brokerage account or something similar. Both of these features should be set up automatically. In a perfect world, the money for your retirement fund and your emergency fund would be deducted from your checking account on the same day that you received your paycheck, so that it would never ever come into contact with your hands. Keep in mind that the amount of money that is suggested to be saved in an emergency fund is dependent on the specifics of your situation. Also, tax-advantaged retirement accounts come with limitations that make it tough to get your hands on your cash if you suddenly need it, which is another reason why you shouldn't rely only on this account as your emergency fund. 5. Start investing now. People may question the sense of putting their money in the stock market while it is experiencing a bear market. Nonetheless, investment has traditionally been the best strategy to increase one's money over time. Your money will increase at an exponential rate only due to the power of compound interest. Nevertheless, you will need a significant amount of time to achieve considerable growth. However, keep in mind that, with the exception of experienced traders and investors, it would be unwise for the average person to try the kind of stock selecting that has made billionaires like Warren Buffett famous. Instead, you should sign up for an online brokerage account that simplifies the process of learning how to invest, constructing a portfolio that is under your control, and automatically contributing to it on a weekly or monthly basis. To assist you in getting started, we have evaluated the various online brokers based on their suitability for novice traders. 6. Watch your credit score. When purchasing a new vehicle or refinancing a house, the interest rate that is provided to you is largely dependent on your credit score. This makes your credit score a highly essential figure. 1. It also has an effect on the rates that you pay for a variety of other necessities, such as your auto insurance and your life insurance. The reason why credit scores have so much weight is because it is generally accepted that a person who engages in risky financial behaviors is also prone to engage in risky behaviors in other aspects of their lives, such as not taking care of their health or even driving after drinking. Because of this, it is essential to check your credit report at regular intervals to verify that your excellent reputation has not been tainted by any inaccurate negative information that may have been reported. In addition, it could be beneficial to check into respectable credit monitoring services in order to safeguard your personal information. 7. Negotiate for goods and services. Many people in the United States are reluctant to bargain for the price of products and services because of the fear that doing so would make them seem impoverished. If you can overcome this phobia, you will save hundreds of dollars each year. Small companies, in particular, have a tendency to be open to bargaining, which is why purchasing in bulk or presenting yourself as a repeat customer may open the door to excellent discounts. Buying in bulk or positioning yourself as a repeat customer can open the door to good discounts. 8. Stay educated on financial issues. It is important to stay up to date on any relevant changes in tax legislation in order to guarantee that you are maximizing all of your adjustments and deductions each year. Maintain an awareness of the latest financial news and events in the stock market, and do not be afraid to make adjustments to your investment portfolio in response to these factors. A person's knowledge is also the greatest barrier against con artists, who want to make a fast profit by taking advantage of less experienced investors. 9. Maintain your property. When you take excellent care of your property, anything from automobiles and lawnmowers to footwear and clothing will have a longer lifespan. Due to the fact that the cost of maintenance is just a small portion of the cost of replacement, this is an investment that should not be overlooked. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.